to all. I'm Kelvin here, and happy Friday. Very good morning. Today will be Friday, the 31st of October 2025, and the last month of October before we head into November next Monday. So before we start our daily dose of market insights, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so before we start, the very interesting and volatile movement that has taken shape in the last 2 days, let's have a recap what has taken shape first that causes the ongoing sideways movement in the price action of the broad-based cross asset classes, and also levels to watch out for. And from there, we will actually talk about our chart of the day for today, and we will wrap it up with what are the key events slash data to look out for in the remaining of today's session. So let's start with yesterday's key event slash data that has taken shape. So yesterday key event was the outcome of that highly anticipated and most watched Trump and Xi first in-person meeting for several years, right? For the first time in several years. So they met together in South Korea to actually iron out any differences that market participants anticipate to actually do a structural change in the ongoing US-China rivalry, especially in the dominance of AI and high technology, where the US and China has been in this kind of pseudo high-tech war since 5 years ago. All right, over here. So let me walk you through, guys, what has taken shape yesterday. So yes, Trump and US President Trump and Chinese President Xi finally shook hands. Over here, they do a very nice optics on the market over here. A lot of rah-rah show going on, but at the end of the day, once things get digested and once the news of the what has been transpired during this closed door meeting start to actually spill out towards the media, because after the talks, there was no official press conference. Yeah, both leaders just went back to their respective, we call it itinerary. So while the news start to seep up into the market over here, what market participants has what's the current news flow of from both sides, that US and China struck a 1-year truce, only 1 year. So there was actually not a trade deal, just a trade so-called reprieve of 1 year to just basically kick the can down the road for them to actually do further negotiation. So structural changes hasn't changed yet. So there's still ongoing rivalry. All right. So in order to get this 1-year truce, let me expand it over here. US will be cutting the Fatalian tariff from 20% to 10% for China. So they will also extending the existing truce on reciprocal tariffs. So that's about close to 100% for 1 year. And China will resume soybean sales and rare earth flows. So this rare earth flows is China bargaining chip. All right, over here, because without these rare earth flows, like I mentioned in my previous dose, US semiconductor firms or semiconductor firms based in US were not able to manufacture those high-tech semiconductor chips and its related parts to drive this ongoing AI driven high-tech arena. All right, so we know that right now, the current state of the US stock market is being centered around this AI optimism team play. So without this rare earth, indirectly, it means that the ongoing stock market boom or AI, the ongoing stock market, we call it a broad-based uptrend driven by AI boom, will not be able to sustain. And that is also a worrying part that is in the US leader. They didn't set it up because why? Because the US economy is pretty much driven by the health of the US stock market, as well as we know in based on the last 20, 30 years over here. Okay, so the agreement is only stabilized relationship between the two countries, all right, and didn't resolve fundamental differences, all right, over here. So because of this, it was a rather lead to what I call profit taking that has earlier on anticipated a better outcome. You know that prior to the meeting, the stock market rallied from the Hang Seng, China, as well as the US stock index push up. Other than this outlier, there's this little drift down after FOMC meeting, but after that, it starts to rally up as well. So even yesterday, the Nasdaq 100 during the Asia session, our CFD index and the E-mini futures surged to a fresh intraday high, or intraday all-time high yesterday. So after the dust has settled, market digest the news, they found that things hasn't fundamentally changed yet. So there is still this backgoing shadow, we call it a trade tension that is still going on between US and China. So only 1 year with price. Anything, let's say if either one of them try to play punk again, this 1 year truce could be easily violated, all right, based on their agreement over here. Okay, so the most important thing over here is that China related China and Hong Kong stock traders wanting to hear this rather positive news is that China uh, companies are able to import NVIDIA higher tech Blackwell AI semiconductor processor, because that idea was being floated out by US President Trump himself before he head to the one-to-one talk with Xi on yesterday. So he actually floated this idea on Wednesday. So market was very jubilant on that. But after the dust has settled, Trump himself mentioned that NVIDIA chip stocks with Xi didn't cover Blackwell. All right, so Blackwell was not being so same thing again. Blackwell is not being the Blackwell. Okay, so what is Blackwell? Blackwell is NVIDIA, one of the most advanced chips. All right, I think it's now the second one. The first one is the Rubicon, all right, or something like that. So Blackwell advanced semiconductor chips to drive the AI model. So we know that both of them are trying to build the best AI driven models on both sides. So one of them could actually dominance in the high tech race. So without this Blackwell model, China big cap, big tech stocks or China big tech companies will face a much more higher hurdle than its US counterpart. All right. So initially things was very rosy. Trump floated the idea that Nvidia may able to ship Blackwell to China, but now yesterday didn't go through. So what China will be getting is Nvidia lower end chips. So that doesn't gel well to the China stock market, i.e. the Hong Kong stock market as well. So both of them actually inched down lower yesterday. So the China A50, the China CSI 300 is down by negative 0.8%. The Hang Seng almost down by 0.9%. And if you look at in today's Asia, come on, give me a minute. What is this? Okay, so if you look at in today's Asia session, the extension continues to decline. Further, Hang Seng is down by negative 0.7%. Those China big stack stocks that is listed on the Hong Kong Stock Exchange, which is under the Hang Seng Tech Index as a barometer as a gauge for China big tech stocks, down more by negative 1.6% because they are the most being their profit, their future revenue is being most impacted the most, potentially because of this negative news flow. And the CSI 300 continues to extend its decline today as well, down negative 0.8% over here. All right, so net overall, it's not a rather it actually suck out the bullish the bullish we call it tone out from the Hong Kong slash Hang Seng indices, at least on a very near term, due to that trade talks aftermath news flow that has taken shape yesterday. All right, now on the US side of the story. So on the US side of the story, things also didn't gel that well as well. So all the four major indices closed in the red: SPX, Nasdaq, Dow Jones, and Russell 2000. So the worst hit was the Nasdaq 100 during the yesterday's cash market US session, down by negative 1.47% after that rather negative price reaction from Microsoft and Meta Platforms, which is a Facebook company, which is the parent company of Facebook, where price action of their respective stock reacted negatively after the release of their respective Q3 results, which I shared yesterday. Microsoft and Meta continues to push far ahead in capex spending on their infrastructure. We call it capacity to ramp up we call it activities to their AI, the respective AI driven business model. So market participants are now doubting that whether this higher elevated capex costs are they able to recoup from future revenue that is to be generated from these AI driven business models. All right, over here. So if you look at the broad the what I call it, the overall component of yesterday's price action, okay, we see deeply in the red for Microsoft, down negative 9.2%. We see deeply in the red for Meta, down by double digit, negative 11%, whereas Alphabet managed to help the Ford positive 2.45% after their cloud, their so-called their cloud server growth actually expanded beyond expectation. All right, over here. So now the story over here is that this doesn't means that the market is about to crash unless support level starts to get taken underway, because we've got to respect various levels of support that is still holding the market. And what's interesting over here is that yesterday fall on the Nasdaq 100. Let's look at Nasdaq 100, because Nasdaq 100 is the one that is driving this AI optimism team play. So if you want to find out whether the AI bubble has popped, the first thing to look out for is the Nasdaq 100. So let's look at the chart of the Nasdaq 100 very interestingly. Okay, very quickly, let me bring you to the chart of the Nasdaq 100. Okay, so Nasdaq 100, yesterday we highlight that we have a, okay, let me do a check. I think the audio is good. Yeah, good, audio is good. So we do a pivotal support at 25,800. Price action tested 25,800, thereabout, a bit of excess with an intraday low at 25,745 before shaping that bounce up during the Asia session today. So there's a bounce. So what's interesting over here is that the support survive. All right, we got to respect that. Okay, support survive. What causes the support survive? There are countless of reasons to it. It could be people buying on dips. It could be a confluence of respective positive news flow coming into the market. All right, so if you look at it over here, is that based on exchange traded product, which is the Nasdaq 100 E-mini futures and the S&P E-mini futures product that are trading right now in the Asia session, okay, as we are speaking. Over here, let me put in another fresh screen so that you guys can have a better view. Okay, so this is the Nasdaq 100 E-mini futures, which is up by 1% and it's trading close the Asia session high right now. And the S&P 500 E-mini futures we also up by 0.6%, less than the Nasdaq 100 E-mini futures, because the Nasdaq 100 E-mini futures has a higher weightage on the so-called US big tech stocks. So now the reason over here is support level holds, we respect over here. So that means the AI bubble at this point in time hasn't burst yet because support level is holding, right? So now the key story over here is that what causes the support level to hold? Like I mentioned, there are a confluence of factors impacting it. Is it due to earnings of the respective big cap technology stocks? Yes, right, because yesterday I shared with you we have two big cap tech stocks reporting their earnings after the close of the US session, which is at after 4 a.m. Singapore time today, right, which is Apple and Amazon. And both of them, the share price reacted positively after the release of their Q3 results. So let's take a look about that. So Apple, first of them, so we know that Apple is not very much of an AI driven play yet over here, but it's more of a consumer product over here. Yes, we know that there's Apple AI intelligence that is launching, but there are the what I call it, the fanfare or the upgrades of it is not really that of a high pace. But nevertheless, Apple grew by Apple stocks rose 2.34% after in the after hour session. All right, 2.34%. So what causes the rise was actually earnings beat and as well as a rosy earnings guidance for this holiday season. So Apple Inc. predicted a major sales surge during this holiday season after releasing the new iPhone 17, with revenue in the fiscal first quarter expected to be rise by 10% to 12% over here. All right, so that is a rather rosy outlook. All right, over here. So you also expect the iPhone revenue to grow double digit year over year, which is our best iPhone quarter ever, based on the management guidance at this point in time. So overall, this upbeat. Okay, then also 1 minute. Let me share with you guys. Okay, also services. All right, so services remains Apple fastest growth segment last year. So that means services, it could be part of the App Store. Revenue rising 15% to 28.8 billion. So that's actually surpassed analyst expectation of 28.2 billion over here. So then overall, it managed to create that positive feedback loop into the Nasdaq 100. And also the one that is contributing the most will be Amazon, because Amazon grew surged by double digit in the after hours trading session, which is 13.2%. All right. So what causes this big surge in Amazon after hours share price in lieu of the release of the Q3 result? That means after the release of the Q3 results, was Amazon cloud unit actually blew expectation. All right, so firstly, the overall earnings per share surged above expectation, but most importantly, the web services. So we know that Amazon Web, all right, is a cloud unit. So this Amazon Web is being built for running AI models now, all right, because we know there's a lot of AI models that's being run. So to increase to increase the speed of the model and to increase the capacity, I would say this, it will require web, number one, cloud-based services, and as well as data centers. So Amazon Web Services provide this kind of we call it product slash services to run these AI models. So the Amazon Web Services, which is part of the business unit of Amazon now, and which is a core one, their third quarter revenue rose to 20%, which is up 33 billion over here, and is the biggest year-on-year rise since end of 2022. So that's a very stellar growth for their current key business unit, which is Amazon Web Services. So this is the strongest growth rate since 3 years over here. And if we were to look at their competitors, that means on this cloud service provider slash product, you compare Amazon together with Alphabet and as well as Microsoft Azure. All right, over here. So Amazon, okay, give me a minute. Okay, so over here, Amazon Inc. grew at the faster clip since the quarter ChatGPT was released over here. That means over here, Q4, this is where ChatGPT was released. So at that point in time, Amazon Web Service only 31% year-on-year revenue growth. So right now, it actually jumped to, give me a okay, so this is Amazon over here. So it jumped to 20.2%. All right, so previously ChatGPT, then after that 20.2% over here, then suddenly it declined, right? It declined all the way to 12.3%. Then thereafter, if you look at it, it starts to recover significantly. All right, so in terms of the way it recovered, that means the rate of change, that means this could be the rate of change, of course everything is year-on-year growth. The rate of change for the cloud services or growth on Amazon Web is at a very quick steep, is at a very accelerated pace over here. So that actually kind of reflected in that 30% rise on their share price in the after hours trading. All right, so that actually explained to us why the Nasdaq 100 is able to help onto the key support level. Number one, on the near term, thanks to Amazon and thanks to Apple. Okay, so we got to respect that support level is still being held for the time being. Okay, over here. So with that, and now that covers the first the the stock market segment. Now let us move on to the FX segment. So for the FX segment, yesterday we do have two central banks meeting other than the Fed. So the Fed over here is that Fed chair tried to dose off the Fed dovish pivot. He diffused it by saying that the up and coming December rate cut is not certain. There's no certainty. So previously, market has started to price in very high chance of 90% that the Fed will do a third cut this year, but before 2025 ends, and that probability has reduced, but it hasn't reduced to be so low to 50% or 60%. All right, over here. So let's look at the CME Fed Watch 2. Because finally, the CME Fed Watch 2, we are able to get a proper one. Because yesterday there was error, so I was not able to show you, right? So right now they rectified the error. So current rate, which is correct, 3.75% to 4%. So that is the latest rate after yesterday's the day before 25 basis point cut. So now market participants now is expecting in the next meeting over here. Let me reduce it so you guys could have a view. All right, which is the 10th of December meeting. So on the 10th of December meeting, market now is still looking for a chance. I will still a high chance of 72.8%. So this 72.8% was reduced from 90+% previously, all right, which was very, very high. So it hasn't reduced down to a very low rate of 60%. So still relatively high. That market is still expecting 25 basis point cut for the December meeting. But however, in the next year on the aggregator tab over here, earlier before the Fed meeting, market is looking for 3 cuts in 2026. So right now, these 3 cuts has been reduced to only 2 cuts for now. Okay, so how do we see that in this aggregator tab? So by looking at the screen over here, so we know that this is December, the last meeting of this year, 10th of December 2025. So this is American format. So the first 2 digits you see is month, date, year. So 10th of December 2025, 73%, it bring down to 3.5% to 3.75%. Then thereafter, they're expecting the Fed to stamp pad on 28th of January 2026, stamp pad again on 18th of March 2026, because 58% chance it will remain at 3.5%, and only 66% chance and 76% chance the Fed may do the first cut of 2026 either in April or in June, right? So that brings down to the first cut, all right, of 2026 to 3.25% to 3.5%. Then thereafter, the second potential rate cut of 2026, the higher chance one is at 94%, which is on the 16th of September 2026. Then thereafter, you realize that there's this turquoise blue line here, just you will go down all horizontal, it didn't move down. That means, i.e., saying that by the end of 2026, the Fed rate will remain at 3% to 3.25%, and it will stretch all the way down to 2027. All right, over here. That means in 2027, market do not expect the Fed to cut at all. That means the interest rate cut cycle ends on 2026. So that's being priced in right now. So because of this less dovish pricing in the years ahead, 2026 and 2027, that causes the dollar strength to come back into the picture. And also the dollar strength came back due to also a risk off that's being seen in the US stock market yesterday, and as well as the risk off seen in the Hang Seng and the China stock market as well. So what's interesting over here is that if you look at the US dollar 5-day rolling performance, right, since post FOMC and as well ex-post FOMC and as well ex-post C-Trump meeting, the dollar rallied and only starts to trade sideways in today's Asia session over here. And also as well, yesterday we do have, okay, 1 second. Okay, let me share with you. The weakness of the strength of the dollar is also driven by the yen as well. The weakness of the yen over here. Okay, for you guys to see. Okay, so that just to make sure that everything is good. Okay, so I think the screen should be showing. I'm not sure why the screen is not showing. Can you give me a minute again? Okay, let me show my screen. Okay, yeah, this is the one, correct. Okay, let me expand. Okay, so the yen weakened to the a level not seen since February. So that's what about 3 month low, plus 3 month low plus against the not even 3 month low. Yeah, it's about what 5 month low against the 5 month low plus. Of course, it's since February over here. So what we could see over here is that the yen weakened dramatically yesterday, and it weakened not immediately after BOJ, because BOJ at the point in time is still below the 154 level. So it burst past the 154 level only after the press conference of BOJ Governor Uda that takes shape during before the start of the European session. That's about 2:30 p.m. Singapore time. So what he comments over here is that he comments talking about wage growth or wage stock emphasis. So what he means that let me share you, okay, because he mentioned this, I want to gather more information on what the labor management stance on negotiation will be. So that means that doesn't mean that we'll wait until we know what's the final settlement will like over here. So the thing over here is that he mentioned this, he's saying that he's not confident about the ongoing wage growth that has taken shape in Japan over here, because the contours of next year annual wage negotiation, that means to kickstart next year annual wage negotiation, the so-called the sentiment will only be known later this month over here from the perhaps from some survey that the government give up to those MNCs and those Japanese corporations, pardon me, those Japanese corporations in Japan. So with that, traders sound out that BOJ Governor Uda, rather he's not confident about the wage growth in Japan, pardon me, and that actually give the excuse for short-term traders to sell off the yen and buy back the dollar yesterday, pushing it up to above the 154 level. All right, over here. So that's for the FX space. And what's interesting over here is that in today's Asia session, okay, in today's Asia session over here, what we could start to see is that the dollar strength gave back a bit. All right, the dollar strength gave back a bit due to, okay, let me share with you guys, due to a reprieve in the yen. Okay, what causes the yen to actually get supported? Because of another news flow over here, which is this Tokyo core CPI data and core CPI data that is out earlier at 7:30 a.m. So the Tokyo core CPI data that is only excluding food, doesn't exclude energy yet, rose to 2.8%, way above expectation of 2.6%, and also above 2.5% that was printed in the previous month of September. And Tokyo CPI figures tends to have a leading element over the nationwide Japan inflation trend that will be released 2 weeks later. All right, over here. So what it means that is give a prelude that the overall trend, inflation trend in Japan continues to be firming up, continues to firm up above BOJ 2% target that has already been met 3 years ago. So you look at the Tokyo core CPI year-on-year trend, you look at the 5-10 year trend over here, it continues to rise over here. All right, there is a very clear higher low. All right, this uptrend continues to push up. And if you were to look at the one that strip off of energy as well, the core one also rose to 2.8% year-on-year from 2.5% in the previous month of September. So if you look at the trend, give me a minute. Okay, it also starts to shape a upturn after declining since May. Right, May was 3.3 with 2.5 in September, and now there's a slight upturn. All right, indicating that the underlying inflation trend in Tokyo, which is a leading, we call it, which is a leading area to gauge the overall Japanese general inflation trend, is showing signs that inflation trend in Japan is not decelerating. So that actually supported the dollar, supported the yen in today's Asia session. And what's interesting over here is that, let me very quickly share with you the chart of the dollar yen. All right. So the dollar yen, yeah, this is what I mean. It spike up over here. Okay, it spike up. Right, there's a spike over here. So this spike up pause right exactly at the 154 major resistance slash medium term pivotal resistance level, which is the descending trend line. Right, the major descending trend line from the high of 3rd of January 2024. All right. So what we will do over now is that there are two key levels to watch out for on an intraday basis. So for sure will be the 154.50 at this point in time, and also the support level will be at 153.20. So in order to see the yen strengthening further, you got to break down below 153.20 before exposing 152.35 and even 151.50 for now. All right. So given the fact that this 153.20 was taken out fast and furious yesterday, hereby turning into a very key psychological levels for the market participants. So if the bulls manage to survive at 153.20 again, then potentially for today it will be more like a sideways movement. All right, over here. So continue to watch these two levels, 154.50 and 153.20. So if we start to see a burst up above 154.50, then potentially this ongoing corrective rebound phase within this very broad base of a sideways movement over here will continue to extend towards 155.40, 50 level on a very short term basis. So if you look at the daily trend, the daily chart of the dollar yen, it's been in this sideways range, a very complex sideways range since the low of December 2023, right over here. Okay, it's been this sideways range configuration. Okay, so that's for that on the FX market. So before we jump into the chart of the day for today, there is one more data I'll share with you guys more pertaining to the Chinese economy, and also that data also causes the bullish tone in the Hong Kong stock market and the China stock market to take a backseat for today as well. So this data will be the rather important PMI data, which is considered as tier 1 leading economic data in China. So this is the state compiled data, MBS manufacturing PMI and MBS non-manufacturing PMI. So these are survey-based data gauging on the purchasers managers in various selected key corporation in China operating in key industries. All right. So MBS manufacturing PMI, which is which is considered as a gauge of business activity in the for manufacturing companies in China, actually continues to contract. Anything that is below 50, contraction. So this contraction actually kind of increased to 49 because previous month was 49.8. Market participants is at 49.6. All right. So over here. Okay, so if you look at the trend, it's going to be lackluster. All right. And the services side, non-manufacturing activities, services. So services almost unchanged. All right. 50.1. Anything that's 50 is still expanding, but the rate of expansion didn't accelerate to the upside. That means previously it was 50, market expecting as 50, came in at slightly 50.1. So if you look at the services industry in China as being compiled by the state statistical board, the MBS manufacturing PMI data. So over the last, I think since April this year, it has been flattish. Right, it's been flattish around the 50 level. So yes, there is growth, but the growth is not accelerating. Right, so the biggest bump so far was at 52.2 in December. Then thereafter, it starts to be rather flattish. So if you look at the 10-year trend, notice that it's just in a flat line around 50. Yes, it's still holding above 50, but the growth rate is not accelerating, so it's not that great. All right, so that actually explains why the bullish tone in the China stock market and the Hang Seng indices took a backseat. So let's very quickly go to the chart of the Hang Seng over here, or the Hong Kong 33. Right, so the Hong Kong 33, for this week, we have a very tight pivotal support level, which I'll tighten it as it's going to inch up higher to be at the 20, this level here, 26, 160, 150 level over here. So yesterday it broke down. So it hit the second support at 26,030 before trying to survive at this level, which is the 50-day moving average. So for now, I will turn neutral between 26,030 and the upper limit will be today's Asia session high, which is 26,310. Okay, which is very close to my previous pivotal support level as well, that has been taken down at 26,150, 160 level. So this 26,310 is also confluencing very closely with the 20-day moving average and today's Asia session high. So unless price action able to break out above 26,310 for today, then we will say that the bullish tone has started to revive, or else potentially for today it could start to drift within this level at 26,310, 26,030. So if we start to break down below 26,030 on the intraday basis, the best will take a firmer control to expose the next support level at 25,855. Below it, we'll see this critical key minor support level at 25,510. So this level is very important. Why? Because this level is the minor trend ascending trend line taken down from the lows of 13th October, where it starts to shape a series of higher low. And if we were to do a Fibo retracement of this series of higher low until the current highest point that is being made on Thursday over here, which is yesterday, that constitute with the golden ratio. Okay, let me remove this. That constitute with the golden ratio of 61.8%. Right over here. Okay, so that's for the first segment of today. All right. So now let me touch on the second segment, because today will be a slim down segment which I will cover the chart of the day, two charts of the day for today. So let me expand my screen over here so that you guys could actually have a view of the charts. Yeah. Okay, so chart of the day will be the Nikkei 225 over here. So the Nikkei 225 / Japan 225 continues to be in a rather strong intraday bullish dynamic, also being supported by the Japanese yen that is on the weaker side of the story. So yesterday we do have a resistance at 51,900 / 51,940, followed by 52,775, 52,830. So the first level very clearly has been taken out. Over here, there's a bullish acceleration taking on. So far, the RSI continues to be bullish. All right, over here continues to be held by this parallel ascending trendline support. Over here, okay, and if we were to look at the previous level, seems to be has taken out this level as well. Okay, so then overall, RSI remains on a support level. All right, remains on support. And what we could do now is, this ongoing bullish acceleration trend continues to be intact for the Japan 225. So two key support level to watch out for today. Number one will be the intermediate support level at this 51,740, right? 51,740, followed by a tightened pivotal support, which I take into account of yesterday's US session low at 51,280, and also very close to this not very close to this minor ascending channel support, a steepened one, ongoing since the low of 10th of October. Next two intermediate resistance level to watch will be 52,775 / 52,830, followed by 53,290 / 53,590, which is a bunch of Fibo extension cluster levels, and also the upper limit of this ongoing steepened minor ascending channel that is still in place since the low of 10th of October 2025. So still maintaining that bullish bias for this ongoing bullish short-term bullish acceleration phase for the Japan 225. Only a bearish breakdown below 51,280 for today will invalidate this bullish acceleration phase to kickstart a minor corrective decline sequence, exposing the next two near-term support level, 50,755 followed by 50,090. Right, so that's for my chart of the day, the Japan 225. Another chart of the day will be the Nasdaq 100 over here, given its positive bounce of the Asia session at the start of today's Asia session. So I will have a bit of, so the pivotal support is 28,000, 25,800. So a bit of access to yesterday's intraday low, 25,745. All right, so I'll give it a bit of access. So intermediate support level will be at 25,965 over here. First resistance level to watch that has already been made during the Asia session yesterday, which is 26,250 slash 26,340 level. That's the upper limit. So above 26,340 takes us up higher towards the Fibo extension cluster, the next Fibo extension cluster level at 26,545, 26,620. Only a bearish breakdown below 25,745 will invalidate today's bullish reversal slash recoveries scenario for the Nasdaq 100 to take it down much lower for the minor corrective decline sequence to extend further towards the downside to these two near-term support level to watch, 25,620 followed by 25,440, which is the gap up support level that has been formed on today's this Monday Asia session, and as well as the lower limit of this minor ascending channel from the low of 17th of October. Right, so that's my two charts of the day to look out for due to its interesting technical configuration. One is the Japan 225 and one is the US Nasdaq 100. All right, so before we go very quickly, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today, key data to look out for, perhaps what we could see is coming out from Germany. We have Germany retail sales over here that is out at 3 p.m. Singapore time. So that will potentially impact the euro dollar and the Germany 30 CFD index. Then thereafter followed by the aggregated Eurozone core inflation rate preliminary data for October. So market is expecting a slight dip to 2.3% from previously at 2.4%. All right, over here. So that could also potentially impact the euro dollar, the euro crosses, and the Germany 30 CFD index. So that will be at 6 p.m. Singapore time. Then as we head into the US session, we have the very first US official speaking after FOMC on the 29th of October, which is Fed Logan. She'll be speaking at 9:30 p.m. All right, over here, then all this personal income data, core PCE price index data, this data will not be released due to the ongoing government shutdown that has really entered to what, the fourth week so far. All right, and also right at early Asia session, 1st November at 12 a.m. Over here, we have two Federal Reserve officials speaking again, Fed Bostic and Fed Hermak, 12 a.m. Singapore time. Then thereafter, it will be a rather quiet US session over here. So let's look at the earnings so far, the earnings calendar. So over at the earnings calendar over here, other than the mega cap technology stocks has already been reported. So for today, over here, is there any key US earnings or not? Let me go down the calendar for Friday. So over at Friday over here, there's no major US earnings that could actually potentially impact the major stock US stock indices. All right, so of course ExxonMobil and Chevron, those are big oil, but the big oil weightage in the S&P 500 and the Nasdaq 100 and even the Dow Jones Industrial Average doesn't have much significant weightage. So they are exposed share price after their respective earnings release may not have a significant movement towards these major US stock indices. All right, so I'm Kelvin here, signing off for today's daily dose of market insight. I wish you all a great and restful weekend, and we shall speak again on Monday. Thank you.